Hey guys, and welcome back to another video. Welcome back to another episode. You are watching Unlimited Options Investing. My name is Adam. Is the market crashing today? A little bit. Big tech is getting absolutely slapped for a second day in a row. Apple, Microsoft, Nvidia, AMD, Google, Facebook, Amazon, Tesla. Twitter is holding up. Of course, off that news that Elon Musk bought a 9% stake in the company. Financial credit services are down. Visa, MasterCard, PayPal, banks, JPM, Bank of America, Wells Fargo, Citigroup, software, Salesforce.com, ServiceNow, Disney, Netflix, Booking.com, Expedia, and the cruise lines. Similar to yesterday, risk off is thriving. Healthcare, consumer defensives, beverages, energy, real estate, and utilities. Even taking a look at crypto, this is not what we exactly wanted to see. We wanted to see Bitcoin hold 46,000 and Ethereum hold 3,400. Bitcoin down 3.55% on the day and Ethereum down 5.65%. And if this is your first time on the channel, welcome aboard and hit that subscribe button, smash that like button, take a look at the description for my Instagram, my TikTok, and my Twitter profiles. Check it out. Heading on over to the Fear and Greed Index, yesterday we were at neutral, today we are at feared. The gauge at 43, yesterday at 46. A week ago we were neutral, a month ago we were at extreme fear, and a year ago we were at neutral. And I remember last year on the SPY we had a short-term bottom in March, and then April was a little bit better, and then that real bottom came I think May 12th, May 13th, somewhere around that area, just to show that volatility can remain for quite a while. When you think you may be out of the woods, you may not necessarily be so. And when we head on over to the NASDAQ, the QQQ on the daily, we have a big gap down on the day, closing yesterday in this area over here, opening up on the day over here right at the moving averages, and then continuing to find more weakness as we're currently at $352. So we had this wicked rally since the mid of March. We found resistance around this $370 mark. And what I was thinking is we would potentially be doing something like this with the seasonality being April, and then potentially finding more strength above the neckline at 370. And that a very key area is that we were going to find support at both the moving averages. What happened today? We opened right at those moving averages and found more weakness. And as I probably say on every single video, the price action can do whatever it wants. These blue lines, green lines, blue lines, yellow lines, whatever, all they are indicators for what may potentially happen, but doesn't necessarily mean that those things are going to happen. Now, as a long-term investor, you don't really care about the day-to-day price fluctuations, but as a trader, if you're trying to get in and get out and make quick money, these are the kind of things that you do care about and things you want to plan for the short term. And it's totally possible that we had a very violent bull trap. Now, that's not necessarily the case as well. We might just recover from where we are right now. Again, April being the strong month that it is seasonally, but at the same time, we can't ignore the price action that we're seeing now. If we do continue to see more weakness as the days go by, the next key area that I'd be taking a look at would be around this $340 mark. And what we'll do is we'll draw a line right at that area. Previous support and resistance, and of course that key area that we broke out of in the middle of March. So that's a tech-heavy NASDAQ. If we look at the S&P 500, this one not looking too bad. We're still at those moving averages, whereas the NASDAQ is now below them. We're hugging very tightly to that 50 EMA. Let's see if this one holds. If not, again, similar idea. We'd probably be looking around this $430 mark. We'll draw a line right over here. Again, support, area of consolidation with both supports and resistances, and the area that we broke out of middle of March. And we see all across the board all these names that we love so much getting shot at. Apple, sitting right at that 20 EMA. Amazon, similar to the S&P 500, sitting right at that 50, in between both the 20 and the 50. Google showing a little bit more weakness below the 50 EMA. Microsoft, which has been really trading very similarly to Google over the past month that I've been looking at it, showing a bit more weakness than the others. Nvidia, this one being even weaker, opening below the moving averages and going down now to where we are at 241, especially after it looked like we were going to break out around the $270 mark. And after this indecision candle, definitely looking like a fake out. And Tesla, after we drew this trend line that connected this peak, and coincidentally right where this peak was as well, not looking the greatest, although we are above both moving averages for the time being. We have had a crazy run up over the last 3 weeks or so. One of the best performing stocks. And to be honest, we do welcome this pullback when it comes to Tesla, again, because of that gap that we wanted to see filled. And something else I want to bring to your attention is the open interest when we take a look at Yahoo Finance. Calls that are expiring at the end of this week on April 8th. It isn't necessarily of a surprise that we're seeing a pullback this week. And not to mention that even though April is a relatively very strong month, the first few trading days of that month aren't particularly positive. So Apple, for example, we had a huge call wall of open interest, 75,000 open interest at the $180 strike. The next biggest being at 35,000 at the 170 strike, currently where we are right now. So with such a huge wall of open interest, it's not really a surprise that we're seeing a pullback, especially earlier this week when we were right at $180. It definitely would not have been in Wall Street's best interest if Apple was making new all-time highs this week. The open interest for Microsoft, we had 10,000 calls for both the 315 and 320 strike, pretty much where we were for most of last week and yesterday. A super key area for the bulls and the bears, pretty much the neckline for Microsoft stock being around 320. If we broke this area, Wall Street would have had to pay up. They don't want to do that. Next up being Amazon, the open interest at 2,600 and 2,500 at the 35 and 3,400 strike prices. So last week we peaked around 3,400, again right at that neckline, consolidating in that area, and then yesterday and today seeing that weakness. Wall Street doesn't want to pay it out. Heading on over to Alphabet or Google, the open interest, the highest one at 1,457 at the 27.50 strike price. I saw this last week when Alphabet was trading around 28.50 or so, right at that resistance point, again, its neckline. And again, made me a little bit weary just in case this week we saw that weakness, especially with the weakness that we see oftentimes at the beginning of the month. So again, right at that neckline, 28.50, and then selling off to where we are today, near those moving averages. So Nvidia, call walls all over the place, 19,000 open interest at the $300 strike. We're nowhere near that right now. 14,000 at 275, a little bit far, and 11,000 at the 240, which is where we are. So we had that indecision last week at $285. 300 would have been that next key area or key resistance to break, and obviously that didn't happen. Lastly, Tesla's open interest, a big call wall at 26,400 open interest at the $1,200 strike. And if you guys remember, we got rejected twice at the $1,150, right where we were expecting resistance and potential for it to fill that gap. And even though we were looking at all this data, they were all indications. There was no for sure sign that it was going to happen this way. For all we know, a couple of days ago, Tesla could have broke, done something like this, and made new all-time highs. Hindsight is always 20/20. We always know what we know after it happens. But that's only because things happen the way they do. We can only live in a one reality. The next highest open interest being at $1,150, which is where we were. $1,250, $1,300, $1,550, $1,350. A lot of people that were really bullish on Tesla. And look how much those contracts are worth right now. $34, $81, $18, $13. I bet you if you looked at this a couple of days ago, they would have been worth multiples of what they are now, and that's options for you. They're leveraged double-edged swords, either on the upside or the downside. And you can even see the change in percentage down 74%, 82%, 70%, 60% in only one day. Otherwise, that's the end of my video. Thank you very much for watching. As always, let me know in the comments below, what do you think of the current market conditions? Are we going to continue seeing more weakness? Or is the seasonality of April going to finally kick in and we're going to see higher highs and higher lows over the upcoming weeks? Let me know in the comments below. As always, smash that like button, subscribe to the channel if you're new, and check out my description for my TikTok, my Instagram, and my Twitter. I will see you guys in the next video.
Over his stick. Back to Barrett. Barrett. Another rich shot. Scores!